Facebook's early investors and a handful of directors are able to sell stock they own in the social networking company today, and that's because the so-called lock-up period, which prevents them from unloading shares too close to a market listing, will expire. Facebook's shares have already plummeted by almost half since its initial public offering, so are they set to fall further? I spoke to Peter Shankman, an investor in New York who's been involved in several successful internet companies.
The world's largest social media network went public in May in one of the most highly anticipated initial public offerings in years, with an initial sale of 421 million shares. However, share prices spiraled downwards sharply and swiftly amid concerns about valuation and growth prospects. Since then, the status of social media stocks may have slumped as Wall Street darlings, but Facebook's big day will be on November the 14th, when more than 1.2 billion shares will suddenly be available for trading.
To sell or not to sell? It's a question many Facebook insiders will be asking themselves Thursday. That's the day Facebook's lockup period expires. Until now, many early investors and Facebook employees have had to hold on to their shares. Now they'll be able to sell off around 271 million shares. Thursday marks just the first round of the series of lockup expirations, and in the next 9 months, Facebook employees could sell off nearly 2 billion shares. And it hasn't exactly been smooth sailing since the company went public. Facebook has lost nearly half of its value since its debut. So it's anyone's guess whether we'll see Facebook insiders dump their shares or if they're investing in the company for the long haul. Now, there are still big questions as to whether Facebook will make money on the advertising front and whether it's going to be able to capitalize on the growing number of mobile users.